It's about that time of day again. My name is Joseph. Tuesday evening, December 11th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple and reliable three-step trading strategy. And my plan tonight is to identify the best locations to look at my favorite entry patterns in our trade room tomorrow morning. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Crude is bullish as it tries to rally off those range lows, and a small trading range of the chart tells me exactly where to look for the best buying opportunities tomorrow morning. The S&P is bearish and trading at the low of a trading range tonight, so rather than trying to sell the range low, I'm looking to buy with a two-try failure pattern tomorrow morning. The Nasdaq is bearish, but trading at the low of a range isn't a great place to be selling. So my plan is to wait for the sellers to try and fail so I can buy this thing back up into the range tomorrow. Gold is bearish, but we just finished the two-try rule at the low of the trading range. So I'm looking for buying opportunities going back into the range, and I have my eyes on a falling resistance trend line to use as support tomorrow morning. The euro is bearish as well, with a strong move down to the low of a range, and my plan is to wait for the completion of the pendulum swing before I start looking for buying opportunities back up into that range for Wednesday morning. Boy, speaking of Wednesday morning, we got a bunch of ranges on the chart tonight, but most of the markets finished the day at those lows. So that means we're looking to fade those bear breakouts and hopefully get some nice big short covering rallies for tomorrow morning's session. And as always, I got a great newsletter in store for you guys and gals tonight. Plenty of reliable opportunities setting up for Wednesday. But before we jump into those charts, I need to remind you, please make sure you never miss a video by joining our mailing list. You can find the opt-in form right on the homepage of our blog at Sideways Markets. That way you'll never miss another great video. Also, if you're not joining me tomorrow in our trade room, the next best option is to download all the charts from tonight's video. It's very easy. You can download all the charts that I have in tonight's video by following that link right below the video on our blog. There's also a link in the description of the YouTube channel. And don't forget, if you have any questions about anything covered in this video tonight, please remember you can post them in the comment section below the video, or in the upper right-hand corner, you can always pick up the phone, call that toll-free phone number, or use the live support tool in the upper right-hand corner. And as always, if you like what you see tonight, please help support this channel by subscribing. And when you do, hit that bell icon so you get notified every time I post another video. And as always, it is awesome to be here with you guys and gals once again this evening. But let's not waste any more valuable time. Let's get ready for tomorrow morning's session. Let's start by checking out the calendar here for tomorrow. Tomorrow's Wednesday, December the 12th, hump day, middle of the week. And of course, Wednesday morning, we have really only one big news event tomorrow on our radar, and that is the CPI number at 8:30 Eastern Time. That's the big news for tomorrow morning, 8:30 Eastern Time. It'll kick things off for us bright and early in our trade room. And of course, we also have that inventory report at 10:30 Eastern Time if you're a crude oil trader. Remember, anytime we have a Wednesday inventory report, my cutoff on oil is 10 a.m. Eastern Time. So if you're an oil trader like I am, get to it early tomorrow. That time between 8 o'clock and 10 a.m. is your sweet spot on a Wednesday morning. Tomorrow night, we also have some major news coming out of China, but that shouldn't affect us too badly. We'll talk more about that and how it applies to Thursday's session. Speaking of Thursday's session, don't forget Thursday is that big ECB announcement. Big summit on Thursday among all the EU leaders. And everyone's anticipating that Draghi will be basically boxed into a corner as far as raising rates, unable to drop rates right now because of the aggressive tightening schedule, or the aggressive discount schedule they've used over the past few years. So we're expecting to see a lot of fireworks on Thursday morning, which means tomorrow probably going to be the last full day of the week for euro and gold traders. Combine that with that CPI number tomorrow at 8:30, and we're probably going to get a pretty good day on gold and the euro. It's also important to give you guys a heads up as well that Thursday evening will be the last newsletter of the year. I always make it a habit to take the last 2 weeks of the year off to do all the housekeeping issues around the office here in Los Angeles. So Thursday evening, the last newsletter of our year 2018. It's been a great run here in the year 2018. But of course, as always, we take our strategic time away from the desk. That way we can come back in January, early January, right? We'll be locked and loaded for a great year next year. So don't forget, market calendars accordingly. There'll be no newsletter on Friday evening. Last newsletter of the year 2018. I can't believe we're talking about that. Will be on Thursday afternoon. But for now, though, tomorrow morning, don't forget, we got that CPI number at 8:30 Eastern time. We got the petroleum status report, the weekly inventory report for crude oil traders, right? Those are the two big news events tomorrow, with the big headline being at 8:30 Eastern time. Watch that gold and watch that euro, because it will definitely be on our radar tomorrow ahead of Thursday's ECB announcement. All right, let's jump into our charts here for tonight. I appreciate you guys sticking around here with me here this evening. I'm still kind of battling through this head cold. I'm sure you can hear a little bit of that in my voice right now. So I'm going to keep on powering through this. I'm sure a number of you guys and gals have been affected by this. It is definitely going around right now, and it ran me over pretty good. We'll push through it tonight, though, and get ready for tomorrow morning's session. Opening up tonight, we got crude, S&P, Nasdaq, gold, and euro. Starting off tonight on oil, oil is bullish with a trading range, a triangle, and a measured move on the chart tonight. The bulls have control of this rally off the range lows, and more importantly, the sellers were unable to take control into lunch, leaving us going sideways with a possible triangle for tomorrow morning. I would expect this market to want to rotate back up to the high of that big wide trading range, which means I'm looking for buying opportunities at support levels. And with this moving average flattening out, and with what looks to be like a range-bound market setting up for tomorrow, the best opportunities are always going to be buying below the triangle, buying below that range for the most reliable trades, going back up into that range high. So, looking at our chart here for tonight, don't forget on the oil, you've got this big wide trading range, right? We're watching this market rally and fall back and forth from top to bottom of this trading range. We spent yesterday moving lower, right? And now, of course, today, right, making that move going back higher. So we do expect the market to want to rotate back to retest the high around 53.84. We had a real strong move higher here into a range, and then of course the old 1-2 try failure as we try to go back up and retest that high. Make no mistake, the momentum is definitely bullish right now. The key is the bulls took control momentum. The sellers were unable to take control, that key 2-try failure, right? Sellers were unable to take it. Therefore, these buyers are on our radar. I want to be a buyer as we go back up to retest the high. Now, we know the market's trying to go. We know we got that measured move waiting over there at 53.18, 53.84 is top of that range. It really comes down to one major thing right now. The objective right now for the buyers is to get back up and retest that 52.40 area. So as we go higher here, I have to be very careful chasing this move as it goes. It looks right now like this market's going to want to turn sideways into a range. Just the way that candle finished things up, this may not turn out to be a range, but it kind of feels like it's settling in for a range. So what we have to do is we have to plan for either 1, we go back through the high, 2, we go up to the high and bounce off the high, or 3, we pull back and look for the buy from there. There are ultimately 3 different scenarios that we're looking for. Again, I expect this to be a range here. So for me, I'm looking for this as a range and looking for it to pull back to the low of that range. The bulls have the bias. I want to buy at support. If I have a trading range, I want to buy the low of that range, which means I'm looking for buys down around that battle zone. Now, the way that I'll do this is a very similar pattern to what we saw earlier, right? And that is that 1 try, 2 try failure. That's exactly the same pattern I'm looking for as we go lower again. We pull back, 1 try, pull back to the moving average, Let those sellers try a second time, and we can buy into their failure. So one option for me to buy if we pull back is to use the 2-try failure pattern, right, to buy down below that trend line, ultimately buying just below the low of this triangle. Now that's the easy one. That's if price pulls back here for us. If the market continues to go higher here, this is where you have to remember where the objective is. We had a big strong run up into a trading range. A 1-2-try failure. The goal is to go back and retest the high. So another scenario I'm watching for tomorrow is what if we go back up to retest the high and then bounce off of it? Then what do we do? Pretty much the same basic plan. I'm trying to see that pull back, that 1 try, that 2 try, and again, 1 and 2, and then back up to retest that high. Continuing here to look for those buying opportunities off the low of that trend line, off the low of that triangle, right, off the low of this range. Now, second scenario would be what if we're really bullish? What if we really run higher here right now? If we really run higher, well, now we know the market's a lot more aggressive than I think it is. Again, I think this is going to be a range as we go into tomorrow. But if I'm wrong, not to worry. If we do get that higher high, let's say we do get a higher high here, if it does run higher here, fine by me. I'm going to grab that high here. I'm going to bring that high up, and I'm going to look for that buy to hopefully be able to combine, right, all of these levels of support together and look for that buy right off the low of that kind of hidden channel, right, the little new channel that forms here by connecting those highs. And again, I just want to make sure in that example, don't get too aggressive on this. It's really going to go through that high because, again, it's important to know where that market's objective is. So we're looking for that short covering rally, right? Looking for that rally going higher, looking for all those short sellers to get squeezed out of this market. If it is a range right now, I'm looking for that 1-try, 2-try failure pattern back up. If we go higher and bounce, not much changes. We're still looking for that 2-try failure off of those lows. And if it runs through those highs, that's really where things get interesting. Now we can mark up that high for a new channel, bring our new hidden channel here, mark up that prior swing, and we can use that hidden channel pattern to buy right up off of those lows. Make no mistake about it, short-term target is back up to retest that 43. Long-term target is up around that 53.84. So today we're talking about trading ranges, triangles, 2-try failures, hidden channels. If you want to learn more about all the details of this trading strategy, I've got a great free trading course. I'll link it up in the upper right hand corner. You'll see a little button pop up there on YouTube. If you're on the blog right now, there's a big red button right below that video on our blog. Grab that free trading class, learn more about my favorite technical patterns, my favorite entry patterns, and of course hundreds of examples taken directly from our trade room here at School of Trade. Don't delay, grab that free trading class, right, and I'll see you inside the members section of our free trading course. Let's keep going. That's the goal there on the oil. How about some S&P here right now? S&P is bearish with the trading range and a pending 2-try rule. The bears have control with strong momentum going lower, but this appearing to set up as a wide range tomorrow morning. My plan is to wait for these sellers to finish the second leg lower and then start looking for seller failures in a short covering rally going back up into that trading range. This was not the easiest of charts today. In fact, a lot of these have some hidden ranges here right now. And you'll notice, right, I'm really trying to read between the lines here about this range. What really gave it away for me was the midline. When I saw this price bouncing off the midline here a couple times today, it really started to resonate, right? This is probably going to be a trading range. Now, with this being a trading range, we're looking to buy low, sell high, and avoid the middle. So I want to buy the low here. I want to sell the high. I want to stay away from that middle. Most important clue right now has actually nothing to do with this trading range. It's all about this strong move down. This strong move down tells me that we should see sellers trying to retest that low. Now, if you go back to oil real quickly here, You might recall how I mentioned earlier that oil's objective was to retest their high. The reason why I say that is because anytime you see a strong move in one direction, you're probably going to see a retest of that high. It's pretty high probability you're going to get that retest of the high. But that's about all we really know. It's major resistance back at that high. We look at the S&P here tonight, and you can see that strong move down, right? That strong move down, we should see sellers try to retest that low. So a classic scenario of a strong momentum push lower, that qualifies as the first try outside the range, looking for a second try outside that range, and then we can confidently start looking for that buy going back up into the range tomorrow morning. So ultimately, I want to be a buyer. I don't want to sell the low of this trading range. So to be a buyer on this, I really, again, want to see them finish up, right, that move. If they don't finish up that move, then what I'll focus on are traps, and we'll use a nested, right, to try here. So there's a couple different options that I want to have ready here for tomorrow. One is going to be, let's assume that they finish their job, they get one try outside the range, two tries outside the range, then what do we look for there? At that point now, remember, we may be at the low of the trading range, but the momentum is tremendously bearish. So we don't want to just try to buy this market. We are expecting a short covering rally going back up into that range, but again, it's just too bearish to want to buy it. So whenever the market is too bearish, but I want to buy, what I'll use is a slight variation of this two try. And we call these a nested two try. And you can see a good example of it right back here. On the way higher earlier on in the session, it was a strong move up. We pull back to the moving average and the buyers try once. Pull back below the low and the buyers will try again. You'll notice what happens. After those buyers tried twice to retest that high, all of a sudden now everybody gave up on it and the market collapsed back down again. Now flip that same pattern around, and that's pretty much what we're looking for here, right, tomorrow as we go lower. We have that first try, right, looking for that second try. Once we get that second try, I'm going to look for those sellers now, not the buyers, the sellers to try once, let them try twice, and then I'll look to buy right into their failure. Let those sellers try once, let them try twice, and then we'll look for that buy signal going back up into that range. We call this a nested two try. It's a slight variation of the major two try. We'll talk about more here as we go tonight. So one try, two try, we'll give you the major two try. And then because that momentum is so strong, rather than just trying to pick a bottom, which can be difficult, I'll wait for the bears to exhaust themselves. One, two, and then back up from there. So if we can get this another leg lower here, if we can get this right second try to complete, we'll look for that nested two try. But what if we don't get the move going lower? If we don't get the move going lower, couldn't this just be a nested try inside of itself? It definitely could. It definitely could. So what I want to look for now is because again, this momentum is so strong to the downside, I want to let those sellers kind of wrap the proverbial noose around their neck. I don't want to try to buy right into their stops just yet. I do want to let them try and exhaust themselves. So to do this, I'm going to look for a very special pattern, which I call a crown reversal pattern. I'm going to see a strong move down. I want to see one more attempt to go lower. And then this time, it's a little trap low. This is my favorite reversal patterns. I talked about this on another lesson called The Best Way to Predict a Reversal. And in this example here, again, you're embracing the idea that you're at the low of that trading range, but at the same time, though, you're also not fighting the momentum of this market. Let those bears try once, let those bears try twice. And notice how I draw this one. It's got that trap low, that trap followed by a nice strong signal candle, right, coming off hopefully the low of that trading range will allow me to avoid the middle, buy the low, and hopefully get that nice big short covering rally back up to retest those highs. Now, what if we go higher here? What if we just run higher, right? What if it doesn't pull back at all, right? What if we just run higher here right now and head higher? Well, that's fine. Now we know momentum has shifted at that point, so now I can mark up that high, I can mark up that low, and I can look for that buy off of that low. This obviously won't be as desirable because it'll be towards the middle of that range. But if we see a nice strong push higher here, then we know at that point the gig is up, the short covering rally has started. Everybody will get out of their short positions, and we'll have to take whatever we can get our hands on as we rally higher tomorrow morning. So a relatively easy plan here for the S&P. The key is we're at the low of the range, but too much momentum to start buying this. So either wait for it to finish, then the nested to try, right? Or if it doesn't finish, it's the crown reversal to make sure we're buying nice and low. If it rallies higher here, find that new channel, right, and buying off of that channel low. The objective is to get back up to retest the high, right, of that trading range. And don't forget, tomorrow morning we'll be in our trade room, 8 o'clock Eastern time, and we'll execute the plan with all of our advanced members. Let's keep going. How about some Nasdaq here tonight? Nasdaq is in a very similar situation to the S&P. We're definitely bearish. We have a trading range with a strong move lower. The bears clearly have momentum on their side, but all signs point to this being one big trading range. So my plan is to use the two-try failure pattern to look for buying opportunities off the low of this range. And again, I'm going to sound a little bit like a broken record here. You can see a good example on the Nasdaq of that crown reversal pattern we talked about, right? This is the 1, this is the 2. See that little tiny trap high up there? Yeah, that's exactly what I'm talking about there. It's a variation of the two-try rule. And as I always mention, I love to use the market psychology that is in with the two-try failure pattern. I talk a lot about it every day in our trade room. We use it all the time here on our nightly newsletter. And it's really a great tool to predict reversals, to anticipate entry points and a pullback. There's so many different ways to use it. Right now, I'm trying to anticipate a short covering rally off of this low right now, and ultimately we're looking for something similar that we saw from the bulls. So again, we've got this strong move down. That strong move down always tells us the odds are pretty good we're going to come back down to retest that low. So if we do get that retest of the low, then it's as simple as that 1, 2, right, that nested two-try failure pattern. As we come back over, look for that nice strong signal. We can buy off of that, right off of that low. It becomes a little bit tricky though, right? If we don't get that deep pullback, if we do now just try to go higher here, 1, and then again, look for that little trap down there, right? Very, very similar to that crown reversal we talked about earlier, right? Almost like, again, trying to kind of illustrate that for you. That's if we don't get that nice deep move lower. Remember, if we get that nice move lower, we have very little to worry about other than momentum because we're not buying too high inside that range. But if we end up going higher here now, we want to really try to buy as low as possible. And how do you buy as low as possible? You look for traps. And that's why I recommend that crown reversal pattern, right? If we don't get that second leg lower. At the very minimum, you're at least waiting to buy, right, that double bottom or that little trap down around 66.80 here. And of course, the same thing goes on the Nasdaq as for the S&P. If we do end up rallying higher here, it's really not the ideal scenario, but we'll definitely look for this as a new hidden channel and look for that buy coming off the low of that channel. Make no mistake though, the objective right now for those sellers is to retest that 51. At that point, we'll look for that 1, 2 back up. Or do we only get the crown reversal staying out of that middle? Or, right, do we get that rally higher here, that rally higher, find that new channel, buy that low, right, of that new channel, and the target being up at that 67.89.5. We don't have much reason to think we'll get much more than that because we've got that pendulum swing. The amount of the move above the range is the amount of the move below the range. And don't forget, we cover a lot in our nightly newsletter, but this does not even touch the amount of information we cover in our free trading course. So if you want to learn more about ranges, pendulum swings, right, swing up, swing down, right, if you want to learn the whole strategy about ranges, grab that free course in the upper right-hand corner. There's the information icon in the upper right-hand corner, right, or grab that, right? Or grab the link right below the video tonight on the blog, right? That big button on the blog there. So grab that free course, learn more about that. That's pretty simple, right? I just want to stay away from the middle as best I can, right? Buy low, one try, two try, back up, right? Sell high, one try, two try, back down. You can learn the entire trading range strategy inside of that free trading class. So make sure you grab that free class to learn more there. So Nasdaq, very similar there to the S&P, looking for those bears to complete this run lower and then look for that short covering rally going back up to retest the high. How about some gold right now? Yeah, gold is bearish with a trading range, a pendulum swing, and a resistance trend line on the chart tonight. The bears certainly have momentum on their side, but they've completed the pendulum swing, right? And they've tried twice to break the low of that range. Now, all I'm waiting for now is successful breakout pullback to this resistance trend line so I can start looking for buying opportunities and a short covering rally back into the range tomorrow. Here's another real choppy, chippy range. This just took me a little bit of time to find. It wasn't easy to find it, but when you add the range on, you project the pendulum swing up, the pendulum swing down, it seems to all make a lot of sense. You'll notice I take that trading range, I copy and paste it up, that gives me resistance. I copy and paste it down, that gives me support. That's ultimately what kind of gives you the tip of the hat that this is a range bound market. Now, of course, the big problem is we might be at the low of the range. We definitely have that one try, that two try. So we're certainly here looking for a chance here to buy going back up into that range. Really the hard part right now is momentum on this is so obviously bearish. Combine that with the fact that we have this very clear falling resistance trend line. Now this is where we can incorporate what you've learned already about that nested two try. One move down there, there's your first try. If I can get the sellers to try a second time now I can combine three of these tools here. One is the major two try, right? 1 and 2 is the major two try. Then I can combine that with the nested two try, 1 and 2. In the meantime, I can use that resistance trend line, not as resistance, but now as support, and look for that buy off the low of that range as well. I know there's a lot of two tries going on in this chart right now, right? But that's just the way ranges go. And again, you can learn more about all the different ways we use ranges by grabbing that free trading course linked up in the upper right-hand corner. But for now, though, again, we're bearish. We're at the low of the range. Rather than just trying to buy off of the low, right, and hope for the best, very difficult to pick a bottom. I always like to use either the combination of the two try or the nested two try. And hey, if we really get lucky here, we might see the market even trap below this low. For example, let's say, we do something like this. We go up, we pull back, we go up, and then trap below that low, right? That'd be that crown reversal. So it could get pretty good here if we can get a crown reversal tomorrow. Wouldn't that be nice, right? Probably not. That would be a pretty remarkable pattern, but obviously that will be another option for us if as we go higher, we get one, right? No pull back to the trend line. Instead, wait for that trap low, right? Trap low off that trend line. That would be a really remarkable opportunity there to buy with a major two try, with a crown reversal two try. And again, we're just trying to buy the low of this range, going back down or going back up into that range. Now remember too, once we go higher here, I'm assuming we go higher here tomorrow. Once we do go higher here, then it's the same thing. We expect to have a lot of momentum building as the market goes bullish. You can see an example right here. Strong momentum move up. There's one try, there's two try, and sure enough, right, we collapse back down. Anytime I see a real strong momentum move, I'm always hesitant to sell into it. I'll let them try once, I'll let them try twice, and now, of course, with those buyers now trying once, trying twice, everybody should already have tried to buy that pullback. Now I can look for them to fail and sell as soon as all those stops start getting triggered on the way back down. Trading range environment, buy low, sell high, avoid that middle, focus on those failures. And don't forget, right, as we use this trend line here, try to keep your eyes on that trend line here now, right, for that next over, right, and up from there. That'll be a nice easy way for us, right, to make some profit going back up into that trading range. So gold, nice and easy there this evening, right, on that gold range. And then this is the tricky one here, right? Euro is bearish with a trading range, a pendulum swing, a bear channel, and a strong move lower. The bears easily have momentum on their side, which tells me that even though this is the low of that trading range, I need to be patient to let those sellers finish this second leg lower, finish off that pendulum swing down around 13,000 before we start looking right for those buying opportunities going back up into that range tomorrow. There's a lot of clues on this euro right now. This is the same range that we talked about from last night. This is the same channel that we mentioned from last night, right? We called that big sell off the high of that channel. What a great example there, right? Which was the 1, the 2, the failure off the high of that channel. We pretty much nailed that last night on the newsletter. Most important thing right now, though, is this trading range. I want to buy the low of the range and go back up into the range. One of the big problems, though, is look at the momentum we have right now. So with that momentum being so strong, what do we look for? That nested 2 try. Very similar we saw back here. Strong move up. Don't just sell it. Let them try once. Let them try twice. And then we'll sell right back in. You can see in this example, once those buyers try once and try twice, you can see they weren't waiting around for a third try. They just bailed on it. That's exactly what we're expecting here on the euro. So strong move down, let them try once, let them try twice, and we'll look for that buy now going back up to retest the high. At the same time, though, right, I also think maybe we get lucky. Maybe we get a crown reversal tomorrow. Maybe it's a 1, maybe it's a 2, maybe it's a trap, right? And then we get the buy off it. I mean, that would be ideal, wouldn't it? That would really be ideal. Get the little trap off of that low to be a buyer off that low tomorrow morning. But again, don't forget, we've got that pendulum swing. We talked about this last night on the newsletter. That 13,000 number is a big juicy target for those sellers. We get a strong move down. I'll be surprised if we don't see it make another leg lower here. And I got my eyes just around that prior swing right there. A lot of times, right when you least expect, it'll trap high and run it lower. So watch out for that second leg lower. If we do get that little, again, a little bit of a trap high above that prior swing, if we do get that second leg lower now, not much changes, right? Now it's a 1, it's a 2, and it's back up. Or maybe it's a 1, right? It's a 2, it's a trap, gotcha, right? And back up we go right from there. Lots of different ways that we do it. Another thing I'm really curious about here is this channel, right? One of the things I learned a long time ago was to always look for a strong reaction with a double overshoot of a channel. What's a double overshoot? Well, whenever we have a channel, let's say with a bull channel, for example, right, the market will usually rotate between the high and the low. Right? Well, an overshoot is when a market goes through the top of a bull channel. Right? That's an overshoot. A double overshoot is when it tries again. Now, when these fail, they mean big explosive moves in the opposite direction. It's almost like the market makes a mistake, right? It's almost like the market makes a mistake. It gets up here and it goes, wait a second, guys, this is way too high. We should get out of this position, and the price collapses back down. If you're in a bear market, an overshoot happens at the low of a bear channel. So here we are, right, at the low of that bear channel. There's your overshoot. If we can get another overshoot, that would complete the pendulum swing. It would complete the major 2 try. And boy, oh boy, does that get me excited, because we see these all the time where a double overshoot of a channel, even more powerful, is a double overshoot of a wedge. Double overshoot to a wedge are even more powerful, right? Imagine a wedge like this, right? A double overshoot would be like this, 1, 2. These will crank in the opposite direction, right? The bears go once, they go twice. It's a double overshoot, right, of that wedge low. Much like we're seeing on this channel right now excuse me, right? Much we're seeing the channel right now, there's a one overshoot, pull back, watch for a second overshoot. And again, I'm just commenting on another big clue I'm seeing. It doesn't really change the strategy very much. It's another layer of increasing our probability here right now. Two try rule below the range, pendulum swing completion. You've even got that measured move right down around 13,100. And then, hey, let's get that one, let's get that two overshoot. And again, if we get that next leg lower here, it's that one, it's that two failure, or even better, it's that one, it's that two trap, right? Back up into that trading range. Now, we haven't talked much about this, but what would it take for a market to break out of a range? What does it take? Well, remember, we talked about this earlier. Whenever I have a trading range, I'm going to take the size of that range and copy and paste it up. That'll create resistance. Copy and paste it down, right? That'll create support. So imagine your market's trading right inside that trading range right now, right? We go up, that's resistance. We go down, that's support. Those are just key levels to keep in mind. One of the things that makes it very difficult to predict breakouts is that even when a market breaks out of a range on strength, it still has to get through those range expansion levels. So if we can get that 1, 2, 3 breakout that can push through that range expansion, well, now we've got something that we can work with. The big challenge is when you have a wide range like this, this becomes really difficult because your range expansion is all the way down at those lows. So what I'll do is I'll take the size of half the range, bring that down, and that creates the range expansion. So follow a bouncing ball here. If I take that trading range, just half of it, when it's a wide range like this, I'll use half of it. Use half the range, and now you know I've got to get through that 12,900, right? That 12,900 area, which again makes perfect sense because it's that pendulum swing. So one try, two try, got to get below that 12,900, or we're looking for that 1, 2 going back up into that range. But if we can, right? If we can get through 1, 2 and go on strength, now we have the 1, 2, 3 breakout. We'll mark up that new channel. We'll use the top of that channel, right, for selling opportunities off those highs. But I'll tell you, I could keep going on over and over again tonight. I got a lot I want to share with you guys and gals as clients here at School of Trade. But in the meantime, though, take that free trading course. It's linked up in the upper right-hand corner. The information icon up there is easy to find if you're on YouTube. If you're here on the blog right now, there's a big red button right below the video. If you're serious about your trading career and you want to learn more about the entry patterns and the entire strategy we use every day in our trade room, right, make sure you grab that free trading class. And speaking of our trade room, what's keeping you from joining me tomorrow as a brand new client? Come out and join us every morning at 8 o'clock Eastern Time. Our advanced members, we get together every morning, Monday through Friday, and we execute the strategy that we teach in our video classes, the same strategy we go over every evening on our nightly newsletter. You can learn more on our website. Grab the free trial for a free pass. Come out and join me in the trade room as a guest. And don't forget, you can always pick up the phone and call that toll-free phone number if you have any questions along the way. As always, my name is Joseph. Thanks for being here tonight. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye.